$44 billion for mayo and spices. I'm telling you, it is the ultimate defensive play. McCormick gets the literal flavor monopoly.
A monopoly where Unilever shareholders walk away with 65% of the combined company. Nate, that is not a McCormick acquisition. That is a Unilever reverse takeover in a trench coat.
Oh, come on, McCormick is driving the strategy.
The footnotes say otherwise, but sure, trust the banker deck. Wait until you see what Apollo is paying for private jets. The rundown.
I just love that KKR is flipping Atlantic Aviation to Apollo for $10 billion. Private equity passing private jet terminals back and forth like a high-end plate of hors d'oeuvres.
The gossip here is fantastic, though. Apollo apparently swooped in at the 11th hour and just blew strategic buyers out of the water. $10 billion for infrastructure that caters exclusively to billionaires. You know they love those high-margin travel assets.
Speaking of things that are absolutely not high margin anymore, did you see the Allbirds rescue?
$39 million. From a $3 billion IPO to getting scooped up by American Exchange Group for the price of a mid-tier Miami penthouse.
The stock popped 30% on the news.
Which just tells you how desperately relieved investors were to get anything at all. It's a brutal end to the wool sneaker era.
Let's pivot to pharma. Biogen is buying Apellis for $5.6 billion. I actually really like this move. They're grabbing a solid rare disease and immunology portfolio.
You like this? Nate, this is pure panic buying.
Panic? Oh, come on. It's a necessary strategic pivot.
It's a desperate overpay because their neurology pipeline is getting long in the tooth. Look at the premium. You don't drop $5.6 billion on Apellis unless you're terrified of your own aging assets. I'm watching the filings to see if someone else jumps in with a counterbid just to force Biogen to bleed a little more cash.
Fair point. The market is definitely still digesting that valuation. But growth is expensive right now. Look at fitness tech. Playlist and EGYM just merged.
$785 million in new equity to create a $7.5 billion enterprise. People are apparently still throwing serious money at connected fitness.
Or look at Ecolab. $4.75 billion for Cool-It Systems. Ecolab makes industrial cleaning chemicals, Maya. Now they're buying data center liquid cooling companies.
Because you can't put a multiple on soap anymore. If you want a tech valuation, you have to cool the servers running the AI models. Honestly, it's a brilliant adjacency.
Everything is an AI play if you squint hard enough. But none of these are the biggest deal on the board today. We need to talk about the absolute behemoth that just dropped in the food sector.
$44 billion worth of mayo and spices.
Exactly. McCormick and Unilever are combining to create a $20 billion revenue monster, and the antitrust watchdogs are already circling the pantry. The big one.
I just keep looking at the structure of this McCormick deal and shaking my head. Unilever is walking away with $15.7 billion in cash, plus a 65% stake in the new company.
It is a massive swing. Nearly $45 billion total value when you add up the $29.1 billion in equity and the cash. $20 billion in projected annual revenue. They are building an absolute global food juggernaut here.
Are they? Or did Unilever just successfully offload its slow-growth mayo and soup brands onto a spice company while keeping majority control?
Oh, come on. You are being way too cynical about this.
I am reading the numbers, Nate. McCormick is essentially taking on a mountain of debt to dilute their own shareholders down to 35%. Who is actually buying who here?
It is a combination, Maya. My old banker brain actually loves the mechanics of this. McCormick gets the scale they desperately need to negotiate with Walmart and Kroger. You combine the spice rack with the condiment aisle, and suddenly you are the most important supplier in the entire grocery store.
I will give you the shelf space argument. That part makes strategic sense, but the cash component is what gets me. $15.7 billion is a huge check. McCormick is funding a massive cash payout directly to Unilever shareholders.
They can service the debt. The cash flows from Unilever's food business are incredibly stable. People do not stop buying Hellmann's mayonnaise just because interest rates go up.
Stable is just a polite word for stagnant. And I checked the footnotes on the synergy projections this morning. They are baking in some extremely aggressive cost-cutting assumptions to make the math work on that valuation. They want to squeeze margins out of a business that Unilever has already optimized to death.
Synergies always look aggressive on day one. But think about the international distribution network. McCormick can push their high-margin premium spices through Unilever's global supply chain. That is the real prize here.
Assuming the regulators even let them get to day one. Antitrust watchdogs are going to have an absolute field day with this.
You think? It is mostly complementary products.
Consolidating that many staple food brands under one roof gives them massive pricing power. We are going to see some serious scrutiny in the coming months. Keep an eye on the regulatory filings tomorrow.
Fair point. I would not be surprised if they have to spin off a few overlapping brands to get it across the finish line.
I just hope they keep the Old Bay. If anyone touches the Old Bay, we riot.
I think your crab cakes are safe, Maya.
Good, because while McCormick is betting the farm on mayonnaise, private equity is out here throwing billions at private jets.
10 billion, to be exact. Apollo is making a massive move in luxury travel, and the whispers about KKR are fascinating. Voices. I love how the analysts are spinning this Apollo deal. They're calling a $10 billion play for private jet terminals and insatiable appetite for high-margin infrastructure.
Infrastructure. Right. Because parking Gulf Streams for billionaires is basically a public utility now. I read that note and actually laughed out loud.
Spoken like someone who hates the free snacks in the private lounge, but you have to respect the tactical play here. The whisper on the street is Apollo outbid strategic buyers at the absolute 11th hour to snatch Atlantic Aviation away from KKR.
I respect the asset, sure, but 10 billion is a massive multiple for a business dependent on luxury travel holding up. If we hit a real economic bump, corporate private jet traffic drops. Period.
I completely disagree with you there. The ultra-wealthy don't suddenly fly commercial just because interest rates tick up. It's an incredibly sticky asset class.
Sticky until the board starts asking the CEO why they're flying private to a golf tournament while laying off 10% of the staff.
Okay, fair. The optics risk is real.
Speaking of optics, the commentator notes on Biogen's $5.6 billion deal for Apellis are brutal. They're calling it a much-needed aggressive pivot to cover up their aging neurology portfolio.
Much needed is an understatement. They had to do something, though $5.6 billion feels rich enough that we might actually see some counterbids tomorrow.
Maybe. But honestly, nothing shocked me today quite like the Allbirds news.
Oh man, the wool shoes.
American Exchange Group is buying them in a rescue deal for $39 million. The stock actually popped 30% on the news.
39 million. Talk about a dramatic fall from grace. My old banking managing director spent more than that on his second divorce settlement.
That's incredibly bleak, Nate.
Just putting the numbers in perspective.
Right. Well, we'll see if any numbers hold up tomorrow. I'm watching the regulatory filings for the McCormick and Unilever mega merger.
Oh, absolutely. The antitrust watchdogs are going to have an absolute field day looking at that massive consolidation. Spill the tea. $39 million. That is the number we are looking at for Allbirds.
I am still processing that. They were valued at what, over $4 billion at their IPO?
4.1 billion. And now American Exchange Group is picking them up from the bargain bin for less than the cost of a high-end Manhattan penthouse.
The stock popped 30% on the news, which tells you exactly how desperate the market was for literally anyone to throw them a life raft. I read the rescue filing. It is grim.
It is a brutal fall from grace. I remember when every banker and tech founder in San Francisco was walking into pitch meetings wearing those gray wool runners.
Well, now they are wearing them to restructuring meetings. But look, speaking of 11th hour moves, we need to talk about the whispers around Atlantic Aviation.
Oh, the gossip on this one is fantastic. $10 billion.
Apollo reportedly snatching it from KKR.
Right, but the real tea here is that Apollo supposedly outbid the strategic buyers at the absolute last minute. They just swooped in with a $10 billion bag to lock down private jet services. It shows you how aggressive they are getting.
See, this is where I push back. You read that as Apollo flexing its muscles. I read it as private equity just passing the same infrastructure assets back and forth because the IPO window is still tight. KKR to Apollo. It is a closed loop.
You are missing the bigger picture. Private equity has an insatiable appetite for high-margin luxury travel right now. It is a cash printing machine.
It is a cash printer until macro headwinds hit corporate travel budgets. I want to see the actual debt structure Apollo is using before I call it a brilliant move.
Spoken like a true skeptic, but if you want to talk about massive numbers and serious regulatory headaches, wait until we look at what McCormick is doing with Unilever.
Oh, the food regulators are absolutely already sharpening their knives for that $44 billion flavor play. Tomorrow's radar.
I'm already refreshing the SEC portal for the McCormick Unilever antitrust filings tomorrow. Regulators are going to lose their minds over that much food consolidation.
Oh, come on. They're combining spices and mayo, not monopolizing oxygen. The real tape to watch tomorrow is Biogen and Apellis.
You actually think someone crashes that $5.6 billion party?
I do. Biogen needs that immunology pivot badly to offset their aging neurology drugs. Watch for counterbids.
No way. Nobody tops 5.6. If you want a real last-minute swoop, look at Apollo snatching Atlantic Aviation from KKR for $10 billion. Private equity just can't resist luxury jets.
It's not the jets, Nate. It's the high-margin parking fees. Wait, did you see the Allbirds ticker just now?
Don't tell me.
American Exchange Group is bailing them out. $39 million.
$39 million for the whole company? They were a $2 billion IPO.
A dramatic fall from grace. Read the footnotes on that rescue deal tonight because we're tearing it apart tomorrow.